Hello and welcome to Business Incorporated live on Channels Television. We'll be tracking the markets, the economy, and of course, let's see how all that affects your pocket. Let's see the stories that set your agenda. Zimbabwe holds policy rate tight to curb fuel price impact. And Uganda's economy grows by 8.5% in the fourth quarter of 2025. Kenya finalizes bilateral trade agreement with China. Great to have you join us for this half hour. I'm Will Ibong. Let's kick off as always with commodities markets, and we start with the metal space where we see that ticking up today after the news that Donald Trump is sending out a 15-point plan to end the war with Iran. Let's look at other metal space. We see spot gold up 3.5%, $4,556 per ounce. We see, however, spot silver down. Spot silver is also up 4.6%. Platinum, all metals are in the green today because we see oil prices dropping, and that's what we're having. Let's quickly look at the oil space now. We'll see that also ticking down on that news that the war may end very soon. But we see Brent crude down 5.4%. That's over 5% down. WTI is also down around that region. We see trading at $98.95, $98.95 a barrel. WTI also trading at $87.50 a barrel. We'll see if that continues to ticker down. Natural gas is also on the downside. We see it 1.39% down. But with all that is going on right now, we want to know how the political side of it is affecting prices, especially with oil, and also the strategies that most countries around the world are going to be talking, because fuel prices are rising. We're going to be joined by the Vice Chair of the African Energy Council, Chinan Dickwell, to break it all down for us. Chinan, it's good to have you join us.
Yeah.
Chinan, a lot is going on right now. We see the IEA talking about signaling, flagging 11 million barrels per day supply that was lost in the course of this war that we're seeing, and also describing it as the largest energy disruption in history. But I just want to ask, does this current price level we're seeing right now with oil prices, does it look like markets are underestimating the damage that we're seeing here?
Good question. I'd say this, even for some of us analysts in the market, it's a bit of a surprise that oil is still sort of $100 per barrel, given all we've seen the last couple of years. But I think there's a huge amount of optimism. There's no doubt about that this can be unwound very soon. In fact, I'll take you back a couple of weeks ago. Well, many analysts were saying that if oil and gas infrastructure was targeted, then we should expect $150 oil. Well, a lot of them were targeted in the Middle East, and we're still talking the maximum around $113 per barrel. So yes, I do think there's a huge amount of optimism that players are baking into this at the moment, but it does not take away the pain. I think there's huge gridlock at the moment. There are glimmers of hope. It's looking like some discussions are ongoing. This is certainly what it looks like right now. The extent of them is not clear because Donald Trump has said very clearly that Marco Rubio and Vice President J.D. Vance are negotiating. The Iranians have just come out, in the last hour, 2 hours ago, to say that no one is negotiating with the U.S. So there's always this back and forth that we're seeing. But the hope is that in the next couple of years we'll get some clarity around what exactly is happening. And actually, just to say this, Will, you can actually see this uncertainty in the oil price. So if I go back to 23rd of March, so 2 days ago, you'd see that very clearly. Donald Trump makes that pronouncement of the ultimatum. But the price of crude oil goes from 100 to about 113 and stays up there. And then I think the moment he then says that negotiations are going, it comes down very quickly, very sharply. And since when it's come down, it's just been going up and down between $100 per barrel, $110 per barrel, down again. And it's just a yo-yo at the moment because at the moment, too many moving parts are ongoing. No one is clear about the exact situation, how things stand.
You just talked about the meeting and this, and Iran denying this negotiations that is ongoing right now. But how do market players, how should they interpret the political signals we're getting and also the realities on ground here?
Yeah, it's a really complex situation. I know it's not the answer you want, but it's very complex. There are a lot of mixed signals, and it's difficult to know. We get one message from the U.S. side of things, and we get the counter message or the counter message from the other side. Just an example is what I just said here. The U.S. giving the signal that negotiations are ongoing. In fact, President Donald Trump, quoting him, he said they got a massive gift, a very substantial gift from the Iranians, which signifies the start of discussions. Part of the Iranians have now come back to say no such thing has happened. The United States government is negotiating with itself. Now, the point I'm trying to make is it's a very complex situation. And I don't want to go too much into the geopolitics of it. The reality of it is if you are an analyst, if you are an energy player, an oil and gas player, it's a very dynamic situation, and you'd have to look at the market with a lot of hedging to understand that there are too many variables at play, and short term looks very murky. I think we have to look at it with a bit of a medium term, longer term view. Potentially, when all of this is over, what does it mean for economies? What does it mean for Nigeria? What does it mean for Africa? What does it mean for LNG Train 7? Okay, because of disruptions we've seen. What does it mean for the pump price in Nigeria? I think these are fundamental questions that we have to ask.
Definitely. It's day 26 of this war right now. And you just heard from Iran. We're talking about the impact. Iran has just said they are going to allow some ships to move through as long as they are not, what's the word? It's not non-hostile ships can transit the Strait of Hormuz. How are they going to determine non-hostile ships, and what does this mean for flows right now, especially that we are down, especially in terms of demand and supply?
Yeah, so I think the reality of it is you have to understand the complexity of warfare here. This is very much asymmetric warfare. Okay, if you put the firepower of the U.S. side by side, the Israelis against the Iranians have no chance. But you have to understand the terrain is what they understand so much. They understand the terrain, and they don't need to do too much to cause huge disruptions in the space to jack up insurance prices. In fact, not just jack up insurance prices, to make sure that insurers do not cover those ships. And I think we've seen a lot of that at play, and this is exactly why there's been a huge amount of gridlock in the area. I think the way I look at this most of the time is to think, what does this mean for the economies in Africa? What is this a huge opportunity? I think it is. If you look at Nigerian crude right now, Kwa Ibo, Bonny Light, Escravos, all of these are starting to look very attractive on the market space. Okay, because the global gridlock means that energy security becomes of a huge premium. And if you are Nigeria, your crude starts to become priced much higher. Many countries will start to look to diversify. I think these are the key conversations that we need to start to have. And beyond that, from a Nigerian state standpoint, bear in mind, 2026 budget was done at about, I think it was about $65 per barrel, something of that sort. Now, $65 per barrel, we are today at over $100 per barrel. So there's a big headroom there. The Nigerian government needs to think about what this windfall means for them. This windfall needs to be taken and potentially put in a fund that can subsidize or stabilize the naira, in my opinion. And if that is done, it could give some reprieve to ordinary houses. For sure.
So what kind of price trajectory, do you think, or structural impact, do you think African producers like Nigeria should be preparing for?
Yeah, I think several. Without a doubt, as long as this thing goes on, we'd have a massive headroom. Like I did say there, $25 per barrel, $30 per barrel headroom. And a lot of the policy right now, from a finance standpoint, needs to be how do we take this and make sure that it really serves the global economy? And it's exactly what I'm saying there. Now, bear in mind for the Nigerian state, well, from a government standpoint, it's good news. But from a citizen standpoint, it's bad news because subsidy has been taken out. So people are directly impacted by the movements of the price of crude oil. So hence my thought there. Government needs to take all of this fund and try to think about how is it that it can affect the lives of the ordinary citizens. Could there be some sort of subsidy? When I say that, I don't mean all types of subsidy. I'm talking about some sort of maybe a transportation subsidy to make sure the transportation is a lot cheaper for people. Could there be some sort of a food subsidy, food supply chain subsidy? These are, I think, the critical conversations that the Nigerian state needs to start to have. And then the second thing I would say in the very medium term is Nigeria needs to learn from this conflict. Big countries in the G7 have had to mobilize their strategic petroleum reserves to deal with this conflict. Nigeria, as we stand today, does not have one. Theoretically, on paper, we do have one, but functionally, we don't have a strategic petroleum reserve that we can deploy. These are the sort of times where we need to start to wear our thinking cap and start to functionalize something of that sort. Whether it's from a private sector standpoint or it is from a government standpoint, we have to try to start to think about energy security in a big way.
You're talking about the reserve now, very good one that Nigeria should be thinking about. We also see India right now looking to Russia to, for its April contract for oil, 60 million barrels. Does this create opportunities for Africa, or does it put pressure in terms of competitiveness? You mentioned that Nigeria does not have reserves. From this standpoint, what should we be doing, especially looking at other African oil producing countries?
Yeah, I think there's a lot. This is the point I made. There's a lot that Africa, and actually, when I say that, I mean Nigeria, Angola, and some of these large countries. There's a lot that we have to do and learn from this conflict. Well, I was just making the point. If you look at the G8, so the G8 countries, I'm talking Italy, UK, US, Canada, Japan, and France. They came together under the banner of the IEA, the International Energy Agency, and they released 400 million barrels onto the market so they can taper the price. 400 million barrels. Okay, that's a huge number. Now, if you come to the home front of Nigeria, we produce crude oil, we just put onto the markets and off it goes. Some of it goes to Dangote, a very small amount goes to Dangote refinery, which is great for energy security, but the bulk of it gets onto tankers and is taken onto international markets. We do not have currently a strategic petroleum reserve where you would say if something happens today, you know what, Nigeria can deploy that reserve to cushion the effect on its citizens. We do not have that. Angola does not have that. Ghana does not have that. Equatorial Guinea does not have that. Much of the oil producing states in Africa, do not have anything of that sort. So what I'm trying to say is, should there be a big discussion around that? Even if it's not a national one, could there be an African strategic petroleum reserve? Just for example, China alone hold approximately 1.5 billion barrels of crude oil at the moment. So many countries understand that energy security is a big thing. Unfortunately, here in Africa, we haven't really worn that hat to make that happen. So I think, the Minister of State for Petroleum, or even President Bola Ahmed Tinubu, who is the Minister of Petroleum, has to start to think about that, because without that, we'll be greatly and greatly exposed.
Okay, I did see the reports that Nigeria is speeding up licenses for digging up oil wells, see possibly to take advantage of the higher prices we're seeing in oil. How do you think that will feed into, say, Nigeria's plan for energy security, and possibly start building a reserve, possibly, if they're even considering it?
Yeah, I mean, it's a great plan, So under the current licensing framework that they have right now, being run by NUPRC, ASR, there's no doubt Nigeria is giving 50 new blocks onto the market. But, well, these are 50 new exploration blocks, okay? These are, basically, to describe it, these are blanket green areas where you have to go and try to find crude oil. Even when you find it, it will take you about 4, 5, 6 years before you can bring those molecules onto the market. So that, in the short to medium term, you can forget about that. In the long term, yeah, potentially, depending on what you find. What I'm talking about is, given existing scenario, existing fields that we have today, Nigeria needs to look within its existing, the crude oil we're producing today, and try to find those efficiencies of selling some, but putting some into a strategic petroleum reserve is something that is massively missing for Nigeria today in terms of its petroleum strategy. So I'm talking pure play crude, but even beyond crude oil, it needs to also have a strategic a strategic reserve for refined products. Other countries have the same. So all of these things have to be done, and have to be done in tandem. Now, the licensing round is fantastic. There's no question about that. It's one of the first big ones that Nigeria is doing in a very long time. But it's not a strategy for the short term. This is, at best, the medium-term strategy. I would say a long-term strategy. But I'll say this, well, some of the big things that we've seen in Nigerian space is OPL 245. OPL 245 was the old oil block that was stalled there in a lot of litigation with Malibu oil, ex-minister Dan Otete, and all of the challenges that we saw with it. In the last month, we've seen that government was able to take that oil mill, unbundle it, remove all of the litigations around it, and push forward a field development plan for that. And that and it's one of the biggest fields, by the way. I think it's about 9 billion barrels of crude oil. Okay, so that these sorts of unconventional thinking that can bring barrels onto the market in the next 2, 3, 4, 5 years, that's the kind of unconventional thinking that Nigeria needs to have. The technical potential to get and produce crude oil beyond 2 million barrels per day, Nigeria has that. Technically, we can produce beyond 2 million barrels per day. But when you look at it fundamentally, when it comes operationally, that is where we fail. So I think a lot of these lateral assets, some of them that have been sat down for a long time, some of the marginal fields perhaps, some of the ones that we can get some production upsides, that is where we can get the very quick wins and start to produce really high up above our quota and even put some in a strategic petroleum reserve.
This is just taking us to circle back to what the IEA is saying. Right now we're looking at over 40 energy assets damaged across 9 countries in the Middle East. How right now are we getting supply, global supply going? What are we looking at in terms of getting
Yeah.
supply out to the rest of the world?
Absolutely. So I think, well, this is the biggest tragedy of this conflict. It's very easy if I think a very simple case would be if you block the Strait of Hormuz. Okay, that's a deadlock for sure. Perhaps after a while that could open up. Given negotiations and everything. But when you damage critical infrastructure, energy infrastructure, then that damage is at a minimum a medium term play. Oil and gas developments before you try to fix them up and get them ready, and it takes a while. And I think that is the big tragedy of this conflict, that even if we resolve this today, we're going to have a period where we'll be going through real pain. We'll be going through real pain just so we can get these assets up and running. And I think that's the fundamental question here, that a lot of these, we'll spend a lot of time just to get them up off the ground, get them running, get them fixed, and all of that. And of course, a lot of money involved as well. You can see all across the board, a lot of force majeures have been declared. Some countries have declared force majeures. They're breaking the contracts because they cannot functionalize those contracts. So I really think that is the biggest dilemma. And as Africans, we must look and see, are there ways that we can look at the market and come into that market and fill that gap? Whether it's from a crude oil standpoint, a refined product standpoint, like we're seeing with Dangote, or even a gas standpoint, like we have with Nigeria LNG.
Definitely. We just hope it's not going to take weeks, I don't know, maybe months or longer for us to get these assets running again, especially thinking of the extent of damage that has already been done. Thank you so much, Ndikwo, Vice Chair, African Energy Council, for your thoughts and perspective on Business Incorporated.
Thank you.
So let's move on to other matters now, especially in the news in Africa. We see Kenya has finalized a bilateral trade agreement with China. President William Ruto announced this today. And the deal is expected to give Kenyan exports near duty-free access to Chinese markets. And this helping to expand the trade and reduce the trade imbalance we've been seeing between the two countries. Now, President Ruto said boosting exports to China is a key part of Kenya's strategy to strengthen economic growth, with the economy showing resilience through stable inflation and foreign investment. Next, we see Uganda's economy expanded by 8.5% in the quarter. That's the last quarter of 2025. And this was driven by robust performance in services, agriculture, construction. That's according to the official data. Now, growth rates outpaced many regional peers. We see that underscoring the country's resilience amid global economic challenges. We see Zimbabwe now, that's the Central Bank of Zimbabwe, kept the main policy rate at 35%, maintaining a tight monetary policy stand to help limit the impact of rising fuel prices on the economy. And the decision comes as global energy costs rise. You see, putting pressure on import bills and inflation, and prompting the bank to hold rates steady to protect price stability and the value of the local currency. Now, authorities say maintaining a strict restrictive policy is key to anchoring inflation expectations and reducing currency pressures amid ongoing external shocks. Now, moving on, we see, let's go to the market straight now and see how African markets performed at intraday. Nigeria's markets, let's say major markets that we track, were in the green. Nigeria holding on to 200,000 level, 201,000, and we see intraday up 0.38%. GSC in South Africa is also up nearly 3% there, 114,000. Big jump as we see gold prices jumping as well. So South Africa's market is reacting to that. Let's see the EGX 30 in Egypt, how they performed. They were also in the green. 1.35% of 47,562. Markets are reacting to the news coming out from Donald Trump that there's a plan to end the war, but we hope that that pulls true. And but we see Kenya ending Tuesday's trading in the red, more than 0.5% down. Let's check out the Middle East markets and see how they performed today. A huge knee-jerk reaction we're seeing there from Middle East market. The Gulf stocks were rising up 4.06% for Dubai index, Abu Dhabi up 2.15%, and we see Saudi and Qatari indexes also trading in the green, nearly 1% for the Tadawul in Saudi Arabia, and Qatar index was 1.38% up. Let's move now to the US market and see how they performed. We see green for futures, especially after trading in the negative yesterday. We see 0.78 for the Dow Jones futures, S&P futures up 0.75%, and the Nasdaq futures also in the green. We hope that the plan does pull through, especially markets. Like my guest they said, there's a ding-dong flip-flop movement in the market, very volatile at this point. Asia markets, we also see that gaining, closing Wednesday in the green. Let's look at Asia markets. We see very quickly they were in the green. Japan's Nikkei, that jumped 2.87%. South Korea, we see the Kospi also gaining more than 1%, that's about 1.6%. And Hong Kong's Hang Seng in China, that added about over 1%, 1.09% to be precise. We see the Shanghai index also gaining 1.3%, and India's Nifty 50, that ended higher as well at 1.72%. And now we'll move now to European markets. I'm joined by Lars Alter, is in Berlin, and is going to be telling us what's happening, especially with the ECB President, Christine Lagarde, giving a speech today on energy prices. I'm wondering how markets reacted to that, Lars.
European markets are generally doing really good today in this Wednesday trading session, all around 1% up, with the DAX and Frankfurt actually performing the strongest. But what is really behind it is not so much the ECB, it is just hope that we're seeing a bit of a de-escalation with the US and their 15-point plan. Of course, Will, any news about the war in the Middle East is being interpreted very carefully, because there's just so much uncertainty. And even if the oil price has dropped a bit, everyone knows that you can't really bank on anything right now. We're talking about banking. ECB President Christine Lagarde, like you said, she spoke earlier this morning, and she says that the central bank has to be watchful or vigilant with regards to inflationary trends, obviously due to those rising energy prices. Now, those particular words, watchful or vigilant, have in the past been used right before interest rates were hiked. So they're seen as a bit of a warning sign by investors. However, any fears investors might be having with regards to higher interest rates, it certainly doesn't show in today's trading.
Still talking about the impact of this Middle East war, we're knowing that fuel prices are rising across countries. People are feeling the impact. The pinch is across here in Nigeria to buy a petrol at the filling stations over 1,400, between that range 1,300 to 1,400. We're all feeling the bite, but we know that in Germany there the consumer has been weakened right now. Tell us what's going on there. What's changing the landscape here, especially in German cities, as regard to what's going on in the Middle East?
Yeah, it's a story really that we can see pan out everywhere. The German consumer has been suffering really for years with the weak economy, having a toll on jobs, on wages, generally the mood, of course. Consumer sentiment is way down, and of course, consumer sentiment is directly tied to consumer spending. Now, the German Retail Association says that more and more stores in German cities are closing. That's how bad it is. In fact, for the first time now, since the reunification in 1990, we will see below 300,000 stores this year. Now that means that over the last decade, Germany lost about 20% of its stores. That's about every fifth store in Germany over the past 10 years has really closed.
So what's driving this? What's causing this? Are people not shopping anymore in Germany?
Well, it is actually a twofold problem. Yes, first of all, due to the weak economy, people are spending a lot less money in general. And that is obviously something that we will continue to see now with the conflict in the Middle East, driving up energy prices, costing average citizens a ton of money. Like you said yourself, of course, that happens everywhere. And of course, when you have to spend a lot of money on energy, so that is money that won't be available to be spent elsewhere. So consumer spending is definitely the major problem here. But there's also, of course, the trend towards online shopping. And while that is obviously a worldwide phenomenon, it's really taken off in Germany so much that companies are really thinning out their brick and mortar locations. Many retailers recently, just over the past couple of weeks, went bankrupt, even bigger one, well-known fashion brands or so. And so we, of course, see a lot more people also going into online shopping because it is becoming a lot easier to do. We have the free shipping, the free returns and everything. And it goes so far as many consumers not even going into the city at all anymore for shopping.
So is this contained just within the retail sector, or is it a broader issue for the economy?
Well, it's definitely going to become an increasing problem for anyone because when stores close, people, of course, lose their jobs. And when thousands and tens of thousands of stores close, that is a lot of people. But there's also a phenomenon that experts are describing as the death of the, excuse me, the death of the inner city shopping areas. Less stores, of course, there, fewer stores there, means that fewer people will venture into the cities, and with fewer people there, that makes business harder for those stores that are still hanging in there. So this exacerbates the problems, leading to ever more stores closing and more job losses. And so we're seeing a downward spiral, and retailers are saying this trend has to stop. The president of the Retail Trade Association just yesterday saying it cannot go on that way, but they haven't actually shown any plans as to how exactly they want to reverse this trend.
We just hope this problem reverses, and probably we see a de-escalation in the war with Iran right now. Thank you so much, Lars Alter, Deutsche Welle correspondent right there in Berlin.
Thank you, Will.
And so let's move on to other matters. Crypto space now. Looking at that, we see Bitcoin in the green, possibly reacting to the news of the plan to end the war with Iran. We see Bitcoin, especially with oil prices ticking lower, we see it up 0.75%, $71,469. That's a huge one for Bitcoin, getting back, recovering from those losses it has experienced so far. Ethereum is also in the green, up 0.77%. We see BNB also rising there. We see Dogecoin is if I look for Doge is in the green, and XRP is also there. Solana is not doing badly as well, but we just have pockets of red there, and Leo is in the neutral there. Tau is also coming up, especially with the news that it's trying to raise its price. We're expecting that price a jump for Tau there. That's, altcoin is going to be, we're going to be watching out for that, keeping an eye on it. But making news, making headlines, we see a lot happening. CZ issues stock warning on Binance listing scams, and that story we're going to be talking about that maybe in more details on other things. And we also have other headlines. Robinhood is revealing executive stock grants, and Deloitte Canada is partnering with Stablecore. And that's all we can take on Business Incorporated today. I am Will Ebong. I'll see you tomorrow, same time. Bye for now.